So I got the daily candle 2-year chart for TNXP, Tonix Pharmaceutical. And this shows how it ran in 2021. Pretty good. But as we see, it gapped down, which shows better on the 1-year chart. In July 2021, and ever since has been in a very clear downtrend. And when we go back all the way to the 5-year chart, we see $9,000 to $14,000 per share price. So we know it's been reverse splitted a few times, and we're looking at a reverse split adjusted chart. So even when we're seeing that $60 price jump in 2021, that's a reverse split adjusted. That never happened. Never got to 63 a share. So that's worth noting. But yeah, clear downtrend, but until right around here in May of 2022, it still did some lower lows, but it's a more gradual downtrend. So it changed off this downtrend, and it's trying to reverse, you can see. And so let's look at what happened when we're looking at right here, this spot right here and right here with this big volume that came in. Let's look at why. So they issued a patent covering the technology used in monkeypox and smallpox vaccine candidate. So it ran, from 140-ish to over $4 briefly, but got rejected on this 50 SMA. Bled back down to this new downtrend. And then now recently, the World Health Care Organization declared monkeypox a global emergency over the weekend. So this and a couple other names ran hard and got a lot of volume. So previously on this initial vaccine news, it got 162 million shares traded that day. Recently it was 53 million and then 56 million the next day. So a lot of volume, not as much as the first time. That's probably why it didn't make as big of a move. But also, we'll go over their recent reverse split and whatnot. So when we look back even further, we've seen it's happened before. After this gap down on July 2021, it's tested the 50 SMA 4 times here. Went back to the downtrend, got rejected on this one. Actually rode the 50 SMA for a little bit, but then went back under. And here we are rejecting it, and here we are testing it right now. So it's an important level to note. So let's go over some of the fundamentals real quick before we go over the support and resistance. So as of May 9th, 2022, there was, we'll say 600 million shares. It's 599.6. So close enough, 600 million shares as of May 9th. But then May 16th, they announced that they're doing a 1 for 32 reverse split. So if you divide 600 million shares by 32, you get 18.75. So say about 19 million shares they have afterwards. And this is when they don't tell you what from the current outstanding share count what it's been reduced to, but they tell you the authorized common share count has been reduced from 1.6 thousand million, so 1.6 billion to 50 million. So that they can't. So if they now have around 19 million shares, but they can still authorize 50 million, they still could more than double their share count right now. And we'll go over their warrants they have existing. And as of that 5-year chart that shows their $14,000 price, here's what happened. They have 4 splits. So besides that one we just went over, that was 1 for 32 on just recently in May of 2020. They had one in 2019, 1 for 10. 2018, 1 for 10, and 2017, 1 for 10. So a lot of reverse splits, on a pretty consistent basis. But if you take that so you find the most recent share count, which is this 600 million on May 9th, and you divide it by that 32, it's that 18.75, so around 19 million. But then we go down here and we gotta look at some of their cash, and this is the easiest way to show it on this paragraph. The company's financial statements have been prepared on a basis which assumes the company will continue as a going concerns, which contemplates the realization of assets and satisfaction, blah, blah, blah. So as of March 31st, 2022, the company has a working capital of approximately $137.6 million. As of March 31st, 2020, they've accumulated a deficit of approximately $386.2 million. So since they've started, they've lost $386.2 million. And they currently have $140.4 million in cash, $137.6 in working capital, right? So what then I like to do is just look at their cash, just look at their net losses. 36.4 million in the 3 months that ended in March 31st in 2020. They lost 20.6 million. So if they have $140 million and they're losing 26 million a quarter, they have about a year and a half or less of cash, right? So the way these quants and these algos will target these micro caps is based off of their losses compared to their cash flow. So that's what this is, why this is heavily shorted. It doesn't have, I mean, it has what you could say right now, 20 million. If it has still had 100, it's lost 20 million since March 26. They have $120 million. They're losing that, about 20 every 4 months. Now they have 5 quarters left at 20 million shares. You could say they have a lot of cash per share, but here's the problem fundamentally. They have no revenue. And then as we go back and look on the annual statements history, we can see they have no revenue in 2021, 2020, 2019, 2018, or 2022. So they're surviving off warrants and dilution and shit. They're just constantly diluting their share count, doing reverse splits. And after this recent reverse split and a price increase, when are they going to do more dilution? When are they going to do another offering? So this isn't a long-term play. It's more of a speculation and hype play, like the CODXs and all the plays that ran with the COVID vaccine, but they never really got fundamentally that much better. So it's also worth noting this is also a hard one to short. I've had a hard time finding borrows. So they had 300,000 as of an hour ago on Fintel. But a lot of times it's been running low to zero and hard in different brokerages to find. So it's also helping. It's very coupled up to GOVX, I've noticed. So let's go over the resistance and the support levels. I got them on the, let's see, 200 day. Oh, they're all gone. Well, first one we got is 119. It's the bottom of this. Next, I got 127. As you can see, the bottom of all this action. And over here. Over 127, it's 135. Which is the bottom of over here. As well as the top and resistance here. And a little bit of action here on it too. Over that is 143. 143, 142, and that's the top of this, as well as some of the bottom, the resistance from over here. There's going to be the psychological level of 150, even though there's not too much price action near it. So I always put that as a side note. There's not much price action on it, but it's the psychological level. I see more resistance around 156, which is the resistance here, the support here, and support on this pullback, This first pullback it did, it bounced off of it. So 155, 156 area has more price action than 150. But 164 as well has being support here, some resistance here, and was what this next pullback. So this, we had to bounce off 155, 156, and then we had to bounce off this 164, 165 range. So that's my next potential support level on the way down. Above that, we got 175, 177 area, which is the top of this, as well as, I think we got to look closer. Yep, the top of this, the bottom of this, and some of the action today. So around the 177 range is going to be potential support to 175. Above that, we got 185, which was the resistance here, partially here. It's temporarily bounced here off of it, and we was resistance today. So 185 is a big point. 192, we got the top of this level. The top of this, move. Near the top of this move and the bottom of this wick. So around 192 could be the next resistance level on the way up. Above 192, let's go back to the candle chart. Let's go to like the 90-day. Above 192, we got the 2 level, which we see is the support here and here, and temporarily the resistance over here. Above 2, the next level I'd say is 250. Sure, there'll be a little bit of resistance in between there, but the next major one will be 250, which is the top of both of these candles, and as well as this one. And then above 250, there's not too much price action. I want to call it a gap. Of course, not a gap, but it's lighter than the rest of the areas, so it goes pretty soft to around 290, which is going to be the top of this candle, the bottom of this candle, and there's some price action from this day in there. Above that, the next major one I see is 375, which is the top of this candle as well as the bottom of these 3 candles around it. So it acted as support and then resistance already. And then above that is 450, which is the support on these several days of daily candles. And nearly, not quite, but was resistance here around 430. Support was around 450, and then resistance was 430 on these candles. So 450 and 430 could be separate ones, but the top of this wick is 480. But the next one is 5, I'd say, which is psychological as well as the resistance of these field candles, top of the candles, the body of the candles and the wicks. And above 5, I'd say 675, which was support for 4 days here, and then the resistance on this 1 day. And between that was 3 days of price action. But I think that's kind of a long shot. I think it's gonna fail to get much over. Probably, if it gets into this spot, I wouldn't be surprised if it could push up to this, 375, 290. What's 290 right here? The bottom of that 375 range. But from there, I don't think it's gonna get much higher, to be honest. I think they'll start diluting and doing offerings. So don't hold this long thinking it's an investment. Trade it, lock your profits, manage risk appropriately. And let's see, I think that's about all. And then on the downside, we'll go over one last time just to make sure. On the way back down for potential supports, we'll look on the 5-minute We'll go a 3-day chart. So we closed around 180 today. Underneath 180, I'm thinking, so the first resistance is at 185, above it, then 192, then 2. 185, 192, then 2. Underneath 180, we got 177, 168, 156. We got the psychological level of 150, but without that much price action around it. Then 143, the next heavy level that could act as support. 135, 127, and 119, which is the bottom of this.
The reason we have inflation in the United States, or for that matter anywhere in the world, is because these pieces of paper and the accompanying book entry, or their counterparts in other nations, are growing more rapidly than the quantity of goods and services produced. The truth is, inflation is made in one place and one place only, here in Washington. This is the only place where there are presses like this that turn out these pieces of paper we call money. This is a place where the power resides to determine how rapidly the amount of money shall increase. What happened to all that noise? That's what would happen to inflation if we stopped letting the amount of money grow so rapidly. This is not a new idea. It's not a new cure. It's not a new problem. It's happened over and over again in history.
When M2 goes up by more than 25% in 1 year, does the printing of more US dollars somehow diminish the value of the dollars that others hold?
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see, if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now, where inflation is at 1.4% for this year. Inflation dynamics, I remember well. I was in college during the 1970s. I remember well high inflation and this feeling of powerlessness on the part of anyone to deal with it, until finally Paul Volcker did exactly that. And we've been in a low inflation, disinflationary mode ever since.
The third indispensable element in building the new prosperity is closely related to creating new jobs and halting inflation. We must protect the position of the American dollar as a pillar of monetary stability around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
I felt strongly that the president needed a Secretary of the Treasury who was experienced in the markets and whom the markets would respect. And Hank Paulson really stood out. He is the leader of Goldman Sachs, perhaps the most successful.
So we had authority to lend, but the Fed had not done something like this since the Great Depression.
Ben Bernanke made a really bold decision to extend a loan for 28 days.
The Federal Reserve agreed basically to help finance about $30 billion of Bear's risky assets. This was the first important intervention that we did, and it was a tough call.
I was unhappy about it, you know. I was a free marketer. I told people that, you know, and firmly believed it, and still do, by the way. But Hank is a persuasive guy, and I trusted him.
I think we all had something in common, which is, you know, anybody who's grown their life in markets understands that markets aren't always self-correcting. So I think we all shared a view about this tenuous fragility of the system.
And I certainly knew I couldn't ask for a number that started with a T, trillion.
How much money are you contemplating here?
I would ask for it to be unspecified.
For some of us, it sounds a little bit like a blank check.
You're talking about potential. 500 billion sounds big, but 700 billion, 500 billion, 700 billion, many people don't know the difference. Basically, we wanted it to be as big as we could get without spooking Congress, so it blew up on our face.
We were a few days away from the ATMs not working.
The 1929 panic was nothing like this. The system had stopped.
We needed to put capital into the banking system, but Hank's concern about capital injections was that it would look like the government was nationalizing or taking over the banking system. And so his idea was to buy troubled assets. This is why it was called the Troubled Asset Relief Program, the TARP.
Meeting in which Hank Paulson, only half in jest, gets down on one knee and begs Nancy Pelosi not to torpedo the TARP legislation.
Usually the Secretary of Treasury keeps me posted on the markets, but I haven't heard from him in a couple of weeks.
I asked him not to use the White House as a political backdrop. I said, because we're going to spook the markets. You walk out of here and you start giving people what happened in the meeting and this, that, and the other. The markets are shaky as it is, and we don't want to be a part of making them shakier.
I looked at Greg and we both said the same thing, which is this is never going to come out of the room, because if it ever got to the market that the Secretary Treasurer was, I don't know if it was a panic attack or whatever, but had basically a challenge breathing. The market couldn't handle it psychologically. So there was.
I was watching the vote on television and watching at the same time, watching the stock market falling and falling and falling, and saying to myself, the whole U.S. economy is at risk, and Congress can't get it together to take the necessary action to help us stop this crisis. I was very unhappy, very disconsolate.
We needed something that was going to work much quicker and be more powerful. We had various capital program ideas to put capital into banks. And we had our teams working around the clock figuring out what would work. Just like my phone rang and I answered the phone and he said, Hank, this is Warren. And my mom has a handyman named Warren. I'm saying, why is he calling me? But it was Warren Buffett.
Hank came to me and said, what we just passed in Congress isn't going to work. I said, you got to be kidding me, man. Now you tell me. His plan was now to give the money directly to Wall Street.
And Hank Paulson really stood out. He is the leader of Goldman Sachs.
Oh, sorry.
Can you tell us what you'll be discussing today, sir? Mr. Knight, can you tell us why you're here today? Can you tell us why you're...
Tim, a bunch of other officials, and they said they have an idea. They want us to take this TARP money. You're 25 billion, you're 10. On this basis, they calculated roughly 2%, I think, of risk-weighted assets. They also fully knew that some people did not need it, and there were a couple of people in that room who needed it.
Nobody wants to publicly take the money.
because if anybody takes it, then the market says, well, they must be terrible. It actually was quite an important decision to twist arms and force everybody to take it.
He was
our system worked really well. So the TARP capital program is the most successful program that is broadly hated in the history of mankind. The fact that the American public hates what we did is not surprising, because in many ways it's un-American.
Today, Vice President-elect Biden and I are pleased to announce the nomination of Timothy Geithner as Secretary of Treasury.
We did a whole range of things to keep the mortgage markets open, lower interest rates.
Obama is rolling out the next step in his multi-pronged plan to revive the U.S. economy, a $75 billion program to help struggling homeowners.
But
I was not surprised by the public backlash, because a year after we've spent $1 trillion+, people are still going to feel worse.
There's a lot of Washington lobbyists, bureaucrats, politicians who don't want to see things change. That's because everybody is making a fortune, and people outside of that area are paying for the money they're making. We're not going to have it.
The Great Depression. And believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful.
I haven't looked yet at the stock market, but it's been going up at record clips. We have a tremendous streak going on. And that's only because of the optimism. The stock market has gained almost $3 trillion in value since the election on November 8th, a record. We've added $3.3 trillion, $3.4 trillion, almost $4 trillion. We've created more than $5 trillion since Election Day, $5.2 trillion in value, more than $7 trillion. We've created now almost $8 trillion worth of value just in the stock market. And by the way, the stock market since our election is through the roof. Isn't it too bad that the Obama administration gets a lot of credit? Our stock market has reached an all-time high today. All-time high. Think of it. Nobody ever talks about it. I just want to state that, as you probably have noticed, the stock market hit an all-time record high today. Very proud of our stock market, what's happened since I became president. The stock market hit today 23,000. That's an all-time record high, so congratulations to everybody in our country.
We're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful. And we have a Fed that's doing political things. This Janet Yellen of the Fed. The Fed is doing political by keeping the interest rates at this level and
quantitative tightening by the Federal Reserve since I won the election. 8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations who openly cut interest rates, so that now many are actually getting paid when they pay off their loan, known as negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of
judged that the risks to the U.S. outlook have changed materially. In response, we have eased the stance of monetary policy to provide some more support to the economy. Of course, the ultimate, any political considerations whatsoever. We will not do that, and it's very important that the public understand that.
Vast economic prosperity gives us flexibility, reserves, and resources to handle any threat that comes our way. This is not a financial crisis. This is just...
Thank you, Mr. President. Thank you for bringing us together. The CEOs of the large banks here want you to know that because of all the work done on the capital liquidity and all the things as we look forward to uncertainty due to the virus and oil price changes. We're very strongly capitalized. We are in great position in terms of liquidity, capital, and strength. But
building off what Brian said, this is not a financial crisis. And the banks and the financial system are in sound shape, and we are here to help part of it. I think